Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, August 22nd, 2025. It is 11:46 a.m. Eastern Time as I'm starting the video. What I'm going to do in this one, as usual, start out with the equity markets. Now that we have Powell's Jackson Hole speech out of the way, go into QQQ, SPY, IWM, small caps. I want to talk briefly on the dollar. And then just trade ideas, trade setups, long and short, not in depth. I got, let's see here, one. No, it's not a new one. I've covered it before recently, but I want to do an update on Lululemon, RGR. I've shared that with you recently. Just go over a few trade ideas. It'll be relatively brief, but I want to get my thoughts out again now that Jackson Hole is out of the way. So yesterday, remember, I said we had the potential for a gray swan event, and I've made very clear that wasn't my call that Powell would get hawkish. In fact, the opposite, because a gray swan is when the odds are very much against something or it's not likely to occur. So it was just, hey, an if, and then how to react. Went the other way. For the most part, he let the doves out, and the market's rallying on it. You know me, I don't trade on news, I trade on technicals, and this is, as I shared with you today, an official short trade, a very objective short entry in my opinion. Here at the downtrend line, the market has been, volatility is waking up recently, with the VIX trending up and looking set up bullish, so you get these big moves. Remember, we've had the biggest drop in a while recently. And so, again, I'm giving you the facts. You do you, I'll do me. I can tell you that I definitely took advantage of that today. I came in today, as I told you I would, light, and it's still not an all-in moment. And being it Friday, it's still not an all-in moment for me either. Right now, the reaction to Powell's speech is net bullish, but on a scale 1 to 10, this is up there. It's probably an 8 or so for an objective short entry. You have the downtrend line. Again, I already got it out to you. It's the same clean downtrend line, and look at that. Right above that, you have nice price resistance. So I set my stop just out of range on these lots that I've added here. Stop on a daily close above 580. That would allow for an intraday stop clearing rate. I don't think we'll get there. You can have, of course, if you take it, you can have a tighter stop. And I gave you some near-term targets down to and told you that if this 550, it says 550.88, so it's closer to 551, but in that post I intentionally set a solid break below 550. Remember, a 550 point security, 1 point is very small. It's a small fraction of 1%, a mere fraction of 1%. So, you want to give it the benefit of the doubt. And then if and when that goes, which I still favor. I wouldn't be shorting here, and I wouldn't have given you the layout if I didn't think that was the most probable scenario. You need to understand that. When I give you a trade setup, there's no guarantee it's going to play out. And a setup is just that. This is an actionable trade. Yesterday's UNG was a setup. I'll get to that in a second. It's still untriggered. It never broke out, hasn't triggered the objective buy point. But this is very objective. When you're shorting, you either short a break of support or a bearish chart pattern, or especially once sell signals have triggered, it's objective to short a bounce back into resistance. So that's it. Hard stop. I like it. I can assure you that most listen to my voice probably won't. Want to jump on board with the sheeple that are buying today, and hey, maybe they're right. And of course, CNBC, I was listening to Powell's speech, and then the first person they march out is America's favorite perma-bull, Tom Lee. I didn't listen to him, but he's gonna always tell you the market's going to go up. Anyways, that's it, guys. Let me move on. Just wanted to reiterate, this is the NASDAQ, the most important index to me by far. Still in a downtrend, by a near-term downtrend. It's an intermediate, longer-term uptrend with a near-term downtrend, simply defined as lower highs and lower lows. And so, again, this is the first resistance. That starts to change things. And of course, if you take out that stop and then the highs, there's just not a lot. We'll still have a divergent high, but that's not a reason. That's not a sell signal. SPY looking a little better, but also still right there, well below the breakdown point right now from the other day. That's SPY, the S&P 500. And then when you look at it on the daily chart, there's the breakdown still intact. QQQ. Let me give you the futures real quick so you can see. QQQ still, all this is just the first we've had. I mean, come on, when was the last time we had 1, 2, 3, 4, 5, 6 down days in a row? That hasn't happened. I'm just eyeballing the chart. since, gosh, it's been a while. So an oversold bounce was coming. Dip buyers do what they do. Again, let's move on. That's no surprise, especially the fact that Powell did kind of affirm the rate cuts are coming, and I've spoke to that before. After a rate hiking cycle, the first rate cut is what typically precedes a recession. The only reason the Fed's going to cut usually is because economic growth is slowing and the job market's turned. And then, as I pointed out in the past, it'd be extremely unusual, almost unforeseen, to see a turn in the job market, turn in the unemployment rate, and then it just goes back down and stays low. So this is the futures for you futures traders. NQ, NASDAQ 100 futures. This is this is my 60-minute chart. So you have hourly candles, 3 months of price history. This trend line goes to the left of the chart, continues on. Well, this is a recent breakdown of that trend line, but we also have this one right here. Here's your big levels. Now, well, first of all, let's talk about where we are right now. We're at the downtrend line I just showed you on QQQ that aligns with this one on NQ. You have, you can see here, price resistance, more of a resistance zone. And I have it at 23,615 up to about 23,723. We're at the lower of that zone there. So again, guys, if much more than this, we've taken out a confluence of resistance. And that's going to increase the odds, in my opinion, pretty significantly that the NASDAQ will eke out what it's been doing for a while, another marginal new high. So that's why my stops aren't set above that high, but below it. So that's what it looks like on NQ. And then for the small caps, as I covered yesterday, we're still holding support. As I always say, support is support until unless broken. I highlighted yesterday, we're on support. This is still a setup. Nothing's changed technically, zero. Nothing has changed other than the fact it's a 52, not even a 52-week high. It's just a new recent high. Here's still the previous high on the small caps IWM. This is my daily chart. This is the most significant uptrend line. Again, covered yesterday. And so no sell signal, a reaction off that level. Small caps like lower rates. So we have the long bond and the 10-year also rallying today, meaning yields are down. So the smallies are rallying. And so that's still a setup, an untriggered setup that needs to break this trend line to trigger a sell signal. I can't, you don't really, I can't make the case like I can on QQQ for an objective short here because I don't see any resistance or anything. I don't have a downtrend line or anything, so just watch that, wait for the break of the trend line if you're waiting to get short, or if you're a bull, buy it and have your stop somewhat below that trend line. Okay, quickly, let's look at the Mag 7-8. You know me, any analysis on the market is not complete without looking at the market leaders, and that is NVIDIA. NVIDIA is set to report. So, if you're wondering what the next catalyst can be for either new highs in the market or a acceleration of this downtrend line or correction that's recently started, it's going to be August 27th. That's next week, when the king of everything, the king of AI, undisputed king of AI reports. So there it is. I'll play the game that I always do heading into earnings. You want to know which way I think this is going to go? I won't mix words. I'm not going to bet NVIDIA personally. Maybe I will. I don't know. If we get rejected here, I am short, as I told you, because of the recent sell signals then added on today. If I stay short the Qs, I will go home with a NASDAQ 100 short exposure. See, there's less risk when you short an individual stock or go long into earnings, especially something like NVIDIA. It's going to gap up or down easily. It can easily gap up or down double digits, 10% plus or against you. But you're not going to have the NASDAQ 100 gap up or down 10%. It's never, I don't think it's, at least not during normal times, going to do that. Circuit breaks, it's not going to do it. So you mitigate your risk because it's safety in numbers. You have 99 other companies in there that are going to drag down or offset any move in NVIDIA. So that's that. I just wanted to point out it's coming up next week. Factor that in. And pretty much, even if you say, it's all right, I'm not trading NVIDIA right now. I'm not even trading the NASDAQ 100. I like SPY right now, or I like my other positions. This will affect everything because the markets are so indexed now, and this is the largest component of both the S&P 500 and NASDAQ 100, that what NVIDIA does will affect the entire stock market. So again, be aware that they're coming up to report next week. And again, based on the technical posture coming off, this is the This divergent high is the first divergent high. It's been building, it's still intact, but with recent sell signals below the trend line since that last divergent high. And that divergent high, which we had shorted off of after that bearish engulfing candle, covered at the lows. That was a 44% drop. So again, that's what we have on NVIDIA, the biggest one, negative divergences. And in my opinion, with recent sell signals, a lot more reasons to be short than long. And look at this muted reaction too today, the market rallying. So I see, momentum's waning. Of course, earnings are coming up. I can't blame even the most ardent bull for not wanting to commit new money right now in front of earnings. But all right, we'll move on. But again, recent sell signal, bearish outlook for me, bearish technical posture, expectation of a post-earnings drop. That does not mean the minute they report in after hours or even where it closes, that opens the next day. I'm talking in the coming days, weeks, months. That's my current prediction. If it's changed, if it goes the other way, it's gonna also affect my outlook and positioning in the broad market. Now, I'm gonna go through the rest, and then I'm going to reiterate, because I always get the couple that act, those few voices on the site that act like the market is the only trade shared on right side of the chart. And we'll get to the longs in a second. We already had 2 pop and hit price targets today. And again, if collectively in the last couple months you've taken all the longs and all the shorts on the site, you're beating the market because the longs are going up more. And we just had a short hit the other day, hit price targets, a couple. One, what was that? TOST, I think, a couple days ago. All right, so there's NVIDIA. Again, bearish, current, nothing's changed in the technicals despite today's rally. That's why I like to do these posts, especially on the up days when everybody thinks it's the, screamingly bullish because Powell didn't, tank the market and gave them what they wanted. Microsoft still clearly below the recent breakdown sell signal. That's this uptrend line price channel. I've covered this quite a bit. And again, 1, 2, 3, 4, 5 consecutive days into yesterday. So you're going to get, especially on a day like today, some buying. But again, muted. This is why I do these videos. If you pick up and look under the hood, I'm looking at the leaders, and the 2 biggest ones are kind of meh. The buyers really aren't. It reeks to me of institutional distribution. I guarantee you a lot of the retail folks, these little, what do you call it? Those on the Robinhood and those types, they're buying these names. And that's typically what happens at the top. You get institutional distribution. Either way, that's just my opinion. I can tell you factually without any, ambiguity. As I've stated, we broke that price channel that I've been waiting for a long time for that sell signal, and it's still very much below it. So there's 2 of the market, the 2 biggest stocks so far on sell signals. Apple, I told you, I don't have much of a read. The chart's a little messy. It is above the 200s, as I said, so you got to give it that. Still well off the highs. And again, just a chart I don't have a strong read on. Alphabet, very much still backtesting that primary, aka yellow uptrend line right here. Backtesting from low with the negative divergence. You zoom in a little tighter, and you have the bearish rising wedge that I recently highlighted to you. These 2 lines here. There's your uptrend line, your divergence line. That's the divergent high. Breakdown backtest of both the smaller wedge and that primary uptrend line. So on a scale 1 to 10, that's up there as far as an objective shorting entry, including the recent divergence. So again, up today. Now look, we keep going up. What happens? The yellow trend line gets regained. We maybe take back the uptrend line from the wedge. And so this was a failed breakdown. And we popped that previous high. There's also, I should have added, previous reaction high, which is right here. And that's exactly where we failed the other day, right there and right here. So yeah, all that is going to be net bullish. And again, guys, if you trade on news and emotions, you're buying, you're going long today. If you have, again, you got to pick your own trading style. Everyone has their own. But if your plan is or was to short a rally into resistance based on the recent sell signals, that's what you have here today. And so that's how I trade. Might feel bullish today. It might prove to be very bullish. A pivot in the market, big move to new highs, like Tom Lee says, going to the moon and back. But I see it the other way right now, unless the charts tell me otherwise. Amazon, remember, recently broke down, put in the first divergent high since this one, which was followed by a 33% drop. We're just freshly coming off this divergent high with a big post-earnings gap down, kick back. Again, all this was covered recently. Back test of that trend line. And then we took out this minor trend line, as I highlighted to you yesterday, and we're still below it. So again, no technical change from what I've seen in these the market leaders, at least these that I've covered in the last few days. Meta, divergent high, entered the gap, as I pointed out a couple days ago. It's back to, it fell into the gap. It hasn't made a gap backfill, but right now it's right on the gap. So again, that is the gap. The top of the gap there was support. Once you make a gap, the top of the gap is support, as is the bottom. And support, once broken, becomes resistance. This is TA 101. So again, I will reiterate, this is also an objective short entry here. If it goes here, and it's here later today, then it's not an objective short entry. It's recovered and got back above there. As of right now, it tried, but it's still back testing the gap right now. Close enough. You don't have to say, oh, it's a 748.37. Again, on a 750 point security, you're talking 7 points is a fraction of 1%. So it's technically right there. And, you want to be safe. You can wait till it closes, or moves back down below it. So that's that. So again, no change right there. Broadcom, and I haven't touched any of these trend lines since I've covered them with you recently. There's your uptrend line. There's your price channel. There's your big divergent high. There's your recent sell signal, that red candle right here. And what do we do? As I talk about, sometimes you break down, you go to hit your first target before you get a meaningful reaction. And sometimes you break down, back test, and then get rejected. So you can make a case objectively short here. You can also wait for an impulsive rejection there. If it takes back that trend line on a solid closing basis, meaning you have a green candle, you park the day clearly back above it, well, it's hard to spin that as anything but bullish, because that means then this was a false breakdown, aka bear trap, right? So react. And again, that's why stops. Anybody shorting today, again, the news was bullish. Anybody shorting today really shouldn't give it a lot of room. This is a tactical entry is what this is. All right, right here is Tesla. So far, Tesla is holding. Remember, this is the most salient the most salient technical levels. The uptrend line and the primary downtrend line that give you that symmetrical triangle I just drew. Breakout, back test. Remember, we fell into the triangle yesterday, but we hit the uptrend line, and so far we've bounced off it. So Tesla, I cannot make a case to short unless it drops, and as I said, and fails the breakout. It failed it, but it went to the apex yesterday. We need to see it take out this uptrend line off the lows. And by the way, guys, I've given you this uptrend line. I created that back on June 13th, but I updated. I might have dragged it to the 18th back here. Point being that we had, since I created this or modified this trend line, we've had 1, 2, and today 3. Look closely, 3 additional reactions. This is additional validation that makes that trend line, in my opinion, more technically significant. More eyes are going to see it. So, and then when you see something like that, you want to recognize, is there a recent reaction low? That's kind of usually where the stops are going to be placed, below a recent reaction low. But again, a close below the trend line in itself is bearish, and even better if you can take out the recent low from 2 days ago. All righty, let's move on to, let's go look at some trade ideas, and I'll get to the dollar. And just want to mention that UNG, because I already mentioned it earlier. I gave it to you yesterday as a setup. There's a great example of a difference of a setup and an actual trade. We're at the trend line, no breakout, no buy signal, got rejected. As I often say repeatedly, resistance is resistance until unless taken out. So we're down. The wedge continues to build. The divergence gets larger on this ever so slightly marginal new low. And so that is still a trade setup pending a breakout right there. Okay, so we have, I wanted to highlight Lulu. This has been, if you want, depending on how you're looking at it, an active trade. Pick this one as a bottoming play based on long-term chart right here. Big positive divergence. At the time, I'm almost certain I told you that I could see the potential, and we'll still be watching this one and interested if it gets down here. That's great long-term support, 165. We're a little bit above it, but you have a nice positive, aka bullish divergence on this weekly time frame. And on the daily, what I wanted to point out to you, because remember, I first threw it out to you here. We hit my first target, pulled back. The divergence that was in place at that low on there's a breakout has gotten even larger. This is your positive, aka bullish divergence down here. And the last update I gave you, I told you we need to take out this trend line, but we also had a BOD, or benefit of the doubt, support level just above it at 206.06. And we hit it. We hit it again. We pulled back. We back tested. We're there right now. So I want to highlight this one. If this market holds up, this is still one of the better looking stocks. As I've told you now for going back about a month, I've been the trade ideas, alongside trade ideas I've been focused on and giving you, including Pepsi and some other ones, are brand name, kind of blue chip stocks that are bottoming with constructive charts. I've told you repeatedly, I won't buy NVIDIA with your money. That's just me. It doesn't mean NVIDIA can't go up another 50, 100%. It just means it's not my type of chart. I'm top picking on those things, but I'm also offsetting short trades using a long short portfolio with the best looking longs. And this one I like, and this one will provide an objective long entry on a breakout above that 206 level right there. Again, breakout back test, impulsive reversal off the back test today, but it needs to pop that level and then continue on up there. So there's one for you. Again, just an update on an existing trade idea. Ruger, I have first gave you Smith & Wesson, talked about some potential fundamental catalysts, but again, at the time I said I wouldn't share it if I didn't like the chart. First and foremost, I need to like the technicals. But when there's a fundamental catalyst, I talked about Trump's big bloated bill, removing the tax stamp, the $400, I think it is, for $200, whatever it is, tax stamp for SBRs, short-barreled rifles, short-barreled shotguns, and suppressors. A lot of people used to think, I probably still do think silencers are illegal. They're not. Anybody can buy a silencer. You just have to pay up until January 1st of next year. It's already been put in place. You had to pay the federal government a $200 rake and get just the application for it. It's more of it's not they call it a tax stamp. And those are going to be removed. And both Smith & Wesson and Ruger, they're your biggest firearm makers, and they both also make suppressors. And I think you'll see a sell, not just suppressors, but they'll probably be, again, this is a longer term fundamental call. People that realize, you can get this, it's fun to shoot these, and it's, you don't need hearing protection. And so it should also accelerate the sales of the firearms as well. Suppressors are a relatively small part, or have been, of their profits, but they've also been a pain in the ass to get. I know that. I'm been gun enthusiast for years and not a big shooter. I don't shoot often, but I'm follow this stuff, and I know people that have those things. And again, it's just been more of a pain in the butt to get. And that $200 tax stamp on top of the cost of these things, which usually start at $400, makes it usually cost prohibitive. It's usually more than the cost of a pistol or a rifle, literally, to buy a suppressor. But now that's going to bring that up. And again, it just may spark an interest in, and they may sell some more of their, most of their guns now. I can tell you the pistols and rifles have threaded barrels. That's all you need, is a threaded barrel to screw one of those suppressors on. So boom. Anyways, whatever. This one's Smith & Wesson's not running, but I still very much like it. And again, you're buying a name brand stock beat down. And as I highlighted then, this was a previous multi-year low. We tested it there again, bounced. We fell below it. So if we pop a little higher, this whole thing here is going to be a false breakdown, aka bear trap. What happens is the short sellers that jumped in on that new low, break the lows, they start to cover here. When the short seller covers, they're actually buying a stock they don't own. They borrowed shares from the broker, someone else's shares, and you have to at some point close that trade out. And so that's when their stops are hit, or they cover for whatever reason. They're buying. It puts buying pressure on the stock. And then longs are going to see it too. Longs, like flexible traders like me, I haven't been short Smith & Wesson, but long, and would be long for lack of a better word, if we get up there. And then boom, take out the trend line, and then I'll also take out the 200-day moving averages. And then my longer term outlook. And then RGR is the one I wanted to highlight today. I've already highlighted this one for you. And I gave you this downtrend line, the last update, that needed to be taken out. And then I gave you also what I call BOD, or benefit of the doubt, resistance level, about 34.95. You can call that 35 if you want. And so that's R1 is a trend line, R2 is the BOD, because it's horizontal price resistance very close to the trend line. So that needs to go. And once that goes, it should open the door. My first target is 37-ish. I have it at 37.12. Always sell a little bit below resistance and or the downtrend line. Depending if and when it gets there, they'll probably come in roughly together. Oh, and you have the 200-day moving averages. If it pops soon, it's going to run right into my 37.12 and the 200-day exponential and simple moving averages. So again, until and unless I see a very strong reason to be aggressively short this market via the indexes, I'm going to continue to do this strategy of trading both longs and shorts. And again, it's been paying off recently. All right, so that's those two. And then again, just to kind of recap today, I told you I ever so slightly pulled this down. Hopefully that was clear in the post, because I had T4 set right about here, and then I zeroed in. I looked closely at the chart and I noticed this reaction low. Traders are going to focus on those. Remember, there's a massive gap, and I still think over time that gap will probably be backfilled. There's the actual gap right there, but you also have bigger resistance there. That's my current fifth target. Most likely additional targets will be added. Either way, you're in for a quick 20%, which blows away anything, and if you've been, shorting the market for, QQQ is down over that period of time, and this one's up. And then I also, when I first threw it out, it was first in videos, we bought it here. This was the primary case for buying it. Dropped to that long-term primary uptrend line and very nice long-term support. And these were what I call trend targets for you, longer-term trend targets, which if hit, it's going to give this stock about a 50% profit on there. So, but again, we could reactions likely, just like when we hit T2, where was it? T3. I told you a reaction was likely, and you did. You got the reaction right there. And then I updated this one yesterday. I told you that's the more bullish of the two reactions, going sideways versus down. Now we're up 20%. You could probably see some profit taking coming in soon. But we're in the gap. So, if you don't have to take profits, we may not get a pullback. Wouldn't shock me at all. We're in the gap. What you can do, I gave you an uptrend line to watch. And so if you want to sit tight and you like the stock, there's an uptrend line. If taken out, that'll probably trigger a pullback to any of these targets. Maybe even come back, retest the lows. Who knows? It all depends on what the market does, the broad market. ACN, did I cover? Yeah, I already covered this one today. That's first target hit. Again, just picking off these, the nice kind of setups that I like. Positive divergence at long-term support for, quality blue chip companies. Divergent low there, that support. And that one was even better because it was a false breakdown. We slightly undercut the support. And there we are, T1, there's T2, and a potential T3. Because if the market can pop onto new highs and hold those highs, I'll make that most like an official third target. But if the market craps out, then I'll probably just leave T2 as the final target on that trade. And then TOST was the one I just mentioned. This is just, kind of picking the best looking short trades, the best looking longs. There's a great example why I list multiple targets. Upon the initial tag each target, a bounce is likely. That's what I told you the other day. So that's it. So, if you're an active swing trader, you sidestep that 5% give back, or you turn around and you put it in your pocket as a profit. So you swung this down, you made whatever we made, I think 9-10%, 7, I forget. And then you made another 5 on the bounce. So now you're up 12%. Where to recycle back in? Well, the most objective, not whether or not we get there or not, is right about here. That's resistance. I'll give it to you right now. A little shy of the $45 level. There's also this yellow line, which is the 50-day exponential moving average. Sellers, so far, they stepped in there. So limited upside if you're looking to recycle back in or reverse it back. if we got there. But also on something like this, what you do is you trail up your profits, because sometimes you don't get that full bounce, especially if the market rolls over. Again, I started out the day giving you an objective short level on QQQ. So if the market rolls over, God forbid it fades all of today's gains, that will be a knife through the heart of the bulls if this gain today gets faded. So that's something to keep an eye on, this big green candle today. So, and again, if I didn't think it would, I wouldn't have thrown the setup out there. And even if the probability is low, again, the risk reward is very favorable for shorting that downtrend line today with stops somewhat above. The only other thing I wanted to cover is the dollar. Of course, the dollar's down because of Powell released the doves today. But guess what? That yellow line is just a measured target I give you. The dollar is still very much in a near-term uptrend. It took out this downtrend line right now intraday. We'll see how it closes. This is a daily chart. All that matters is the 4 p.m. close of this candle. But I can tell you we're still in a near-term uptrend. Remember, we already hit the first target once, resistance, pulled back from it. And if we can power back up for whatever reason, that's going to be net bearish for gold, silver. They're all rallying today because every dollar-sensitive assets, crypto, all that stuff, even the stock market's rallying because the dollar's down. So we'll watch this. The day is still young. We'll see how we close the week today and how we follow through next week. If this is just a fleeting knee-jerk reaction to Powell's speech today, then we'll know by next week. Maybe today at the end of the day, I don't know. If they reverse this whole rally today in full, well, there's where we shorted. So you're already up, 0.5%, whatever. If you trade futures, that's a nice short so far. But yeah, I think it'll be like I said, a very significant technical event. There's a reversal right off our short entry. So, all right, let me wrap up and get the video out to you guys, and I'll continue to hunt for trade ideas, new ones. And if you want any updates on anything that I've shared recently, or you have something else you're watching, by all means, post it in the comments section, and I'll get back to you as soon as possible. And the issues, I resolved all those website updates yesterday, so everything should be working fine now. If you're not getting email notifications or anything, just drop me a note in the comments section below any one of the posts. This has been Randy Finney with Right Side of the Chart. Have a great day.